Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, we're going to be hearing from one of the most reliable, useful sources of stock-related news and information, in particular Tesla stock that exists on planet Earth. Of course, we're talking about the mainstream finance media. I'm just trolling you guys. We're actually going to be hearing from a Wall Street stock analyst. I'm also just trolling you guys. No, we're going to be heading over to Twitter to look at a tweet storm from one of the biggest Tesla geeks on the planet, James Stephenson, at @ICannot_enough. Today's tweet storm is a great way of visually summarizing why Tesla stock is the only stock you need to own this decade and why it's likely to head to the moon. So let's get into the video. And by the way, since I know there's a lot of crypto lovers watching and people who like free stuff, it's your lucky day. For a limited time, you can get up to $250 in free crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. It also helps out the channel. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it. They say a picture is worth 1,000 words, and in the case of a stock, especially like Tesla, I think a chart is worth 100,000 words. Now don't worry, we're not going to look through all 69 tweets in this gigantic tweet storm. There's a link in the description if you guys want to spend the time doing that. I'm just going to pick through some of the highlights. And I also have a request. If you happen to know anybody who's anti-Tesla stock, they think the company's doomed, they don't see a bright future ahead of them, please send them a link to this tweet storm. Ask them to look through these tweets, do a little bit of thinking, and then explain to you exactly how they've come to that conclusion, because I honestly cannot understand how anyone could doubt the viability of this company or their trajectory over the long term after looking through these tweets. So with that said, let's get into it. So here we are over at the beginning of this gigantic tweet storm. We're just going to be focusing primarily on the 16 charts that James has provided. And by the way, I just want to point something out here. I think there may be a common thread between myself and the 2 relevant people in this Twitter thread. I'll leave you guys to figure that one out. So let's get into the first tweet. Here's what Tesla's total revenue looks like by year and quarter. These are actuals, not my forecast. It's hard to believe people are still selling this company short and saying the growth story is over. I am projecting this kind of revenue growth to continue. And I'm going to jump in here. I also am on the same page as James here. So let's have a look at this visually. I think this is one of the most brilliant charts of the entire tweet storm. So what we're looking at here is Tesla's quarterly revenue in millions from their inception to current date. Now, what we're seeing here is each of these segments is quarterly revenue. We can see there's tiny slivers of revenue in 2009, 10, 11, Roadster primarily, 2012, that's when the Model S was released, 2013, this is all Model S, 2014, all Model S, 2015, there's some Model X in there as well. These are very low volume vehicles, but we can see already the trend, growth. 2016, more growth. And 2017, imagine that. Even stronger quarterly growth. Look at this, Q1 of 2017, for example, bigger than Q1 and Q2 of 2016 combined. We can see here that 2018 Q1 was bigger than 2015 Q1, 2, and 3 combined. Very strong growth once again. And by the way, for the record, Q1 2016 is when I began investing in Tesla stock, just prior to the Model 3 unveil. Again, very strong quarterly growth in revenues in 2018, an enormous Q3 and Q4. And by 2019, Q1 revenues alone were greater than the entire year of 2015, okay? This is a really great visualization of how quickly and how dramatically Tesla is growing revenues. We see this trend continuing. Q1 was the worst quarter of 2019, yet Q1 alone bigger than the entire year 4 years earlier. More phenomenal growth in 2019 than 2020. The same story. Extremely strong quarterly growth overall once again. And I love this final chart here. Q1 of 2021 alone bigger than 2016's entire year and almost the same size as 2017 in terms of total revenue. I might be going out on a limb here, but I don't think one needs to be a genius to understand the trend here. Q1 of 2021 is almost as much revenue as the first 2 quarters of last year. And guys, spoiler alert, maybe you don't know this, but Tesla is currently constructing a factory in Austin and another factory in Berlin. And what happens when those factories are actually producing vehicles and then delivering those to customers? That's right, 2 more gigantic sources of revenue for Tesla to continue this trend. As per James's comments on this tweet, I really don't understand how anyone could be shorting Tesla stock or think this company is not growing at an insane rate. I mean, just look at this visually. Probably the most important chart of this entire tweet storm. As I said, A chart is worth 100,000 words. On to the next tweet, my quote. Here's a sexy chart that shows total global vehicle deliveries by model and quarter. I am projecting 218,000 deliveries in Q2 and 917,000 for the full year 2021. This is another great visualization, not revenue, but vehicle deliveries showing the same crazy growth trend. And if we pull this apart a little bit, the S and X don't really make up any meaningful volume. It's pretty much worth ignoring these for the future of Tesla in terms of vehicle deliveries and revenue, in my opinion. What does matter, however, is the Model 3 in grey and the Model Y in yellow. We can see that the trend for Model 3 sales is up. The same is true of the Model Y, and these will continue to increase over time when Berlin and Austin are up. However, that's not where the story ends. Just imagine what happens when you stack on the $25,000 Tesla, which alone is likely to outsell everything else Tesla is selling in a single quarter on its own. And then you stack on top of that the Cybertruck, and then you stack on top of that a Tesla van. Each time Tesla produces a new vehicle and enters a new segment, the total addressable market expands massively, meaning there's huge growth still ahead of the company. We're now on to the next tweet, showing Tesla's global deliveries of their two top-selling vehicles, the Model 3 and the Model Y, using Tesla's data, as well as some projections from James for Q2, Q3, and Q4 of 2021. So once again, we can see a very strong trend, huge growth in total Model 3 deliveries overall, and of course, there's a little bit of lumpiness to these. I'm sure there's a few nitpickers going, oh my god, Q1, what's going on? There's a little bit of seasonality to the automotive market, and in addition to that, the Model Y itself is going to be cannibalizing some of the Model 3 sales. In my opinion, it makes very little sense to get a Model 3 when you can just buy a Model Y instead. Very similar performance, more utility, there's more space, etc. You lose a tiny bit of range, but not a meaningful amount. I think overall, over time, as Elon Musk has pointed out, he expects the Model Y to outsell the Model 3, S and X combined, and I think this is a reasonable assumption. And we can see a very steep increase once the Model Y was introduced as well, with deliveries continually 2,000, then 13,000, then 32,000, 38,000, 61,000. James's projections going on to show 91,000, 108,000 and 126,000 deliveries. And I think this is a pretty reasonable estimate. On to the next tweet from James here. Quarterly adjusted EBITDA is the profitability metric that determines milestone achievement in Elon's compensation plan. And for those of you who haven't seen my videos on Elon's giant package, his compensation package that is, I'll put a card in the corner, well worth understanding. James also has a prediction in here. I expect all future quarters will exceed the quarterly record high of 1.85 billion set in Q4 2021. I tend to agree with James on this one as well. And we can see once again this chart visually showing a very clear trend up over time. James's projections continuing that, and of course I agree with James on this one as well. It's an absolute no-brainer. The more vehicles Tesla sells, the more money they'll be bringing in every quarter, the more profitable they'll become, the more operating leverage comes into the picture as well, blah, 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 blah. Over time, Tesla is not only going to be bringing in more revenue, but the percentage of that revenue that gets to the bottom line is going to increase over time as well. The introduction of things like the gigantic gigacasting, deleting hundreds of parts and processes, means Tesla can produce more vehicles with higher margins than they've previously been able to do, and they continue to find new ways to do more with less. So in my opinion, it's not going to be a linear relationship between revenues increasing and adjusted EBITDA. There's going to be a non-linear relationship because Tesla is becoming even more capital efficient. They're doing more with less. I quote, "Here's a few charts that all the Tesla haters hate. The next time one of them tells you Tesla isn't profitable, show them these." Fair point, James. What we're looking at here is trailing 12-month data. We've got the gross profit trailing 12 months, and again, very clear and obvious trend, up. Trailing 12 months adjusted EBITDA, the same trend, up. Trailing 12 months earnings, and the same trend, once again, up. Finally, we've got trailing 12-month GAAP earnings, and again, the trend is up. Now, I really don't understand how anyone can argue with this data. Like I said earlier, a picture is worth 1,000 words. A chart is worth 100,000 words. With these four charts combined, we've got about 400,000 words that basically say the same thing. Tesla is growing in every meaningful financial metric you can measure. The trend is obvious and inarguable. Just visualize in your mind what this looks like when you add another 1 year, 2 years, 5 years, 10 years onto these charts. Now, admittedly, the final 3 bars in each of these charts are projections from James, so maybe you might argue, hey Stephen, how could James possibly know what's going to happen in the next 3 quarters? He doesn't have proof, he doesn't have a time machine. That's a fair point, but James does appear to have a functioning brain and an ability to infer based on the available evidence today. I've got a funny feeling that his projections are going to be pretty much bang on the money. But hey, if you're an ultra skeptic, ignore those. The same point remains. The trend is clear and inarguable. I love a good troll poking fun at idiots who have no idea what they're talking about. And Tesla Charts is a great example of one of the most deluded members of Tesla Q. Shout out to this genius. James has taken it upon himself to continually update a chart showing Tesla revenues after Tesla Charts surprisingly and unexpectedly stopped updating this chart. I wonder why. So it was Q2 2020 when Tesla Charts last stopped updating this chart. It's showing that Tesla quarterly revenue appeared to be relatively flat, maybe even declining depending on how you read the data, aka with your eyes closed, failing to factor in product ramps, seasonality, etc. We can see the following 3 quarters updated by James himself because Tesla Charts for whatever reason had stopped updating this particular chart. I wonder why. Strong increase in quarterly revenues, and then James's projections in red, which are about right. This is a fascinating chart here. I quote, "Here's a chart showing where the average dollar of Tesla's revenue comes from over time, using a 12-month trailing average to smooth out seasonality." Of course, this does factor in a few quarters of projections here from James. The rest of this is actual data. And we can see here, let's start back in 2019 in Q4. About 80 cents of $1 of revenue coming from Tesla automotive sales, excluding regulatory credits. A tiny sliver, 2 cents out of every dollar coming from regulatory credit sales, 4 cents from automotive leasing, 7 cents from energy, and 6 cents from services and other. And these proportions stay relatively steady over time. This is a great chart to send to debunk some of those bellends who believe that Tesla makes all their money from selling regulatory credits. And now we're almost looking at the inverse of that chart. This is how Tesla spends all of their money. Q4 2019, Tesla spent 66 cents out of every $1 of revenue on automotive cost of sales. And this is a very important chart to pay attention to. What you'd like to see overall, if a company is becoming more profitable, more capital efficient, therefore more money coming to the bottom line, generally speaking, you want to see the cost of sales for their primary product decreasing over time. 6 cents on energy, 9 cents on service and other, 7 cents on R&D, a stunningly low amount when you really think about the level of growth and innovation happening at Tesla. 10 cents on SG&A, and just 3 cents on everything else, excluding stock compensation. The most important thing to pay attention to here are these green slivers, non-GAAP earnings. We can see the trend very obvious visually. We can see here in Q1 of 2021, Tesla at 9 cents of non-GAAP earnings per $1 of revenue. And as James projects, big increases expected throughout the year. And again, I'm on the same page here. This is so obvious, yet people somehow seem to be missing this. And now on to the competition. I quote part of the tweet here. "It's pretty remarkable how Tesla has already risen to 4th place, trailing only Mercedes-Benz, BMW and Lexus, whilst only offering 4 models." Let's have a look at this chart. So what we're looking at here, premium vehicles sold in the US by brand. These are annual deliveries 2017 to 2020. Now just to give you guys an understanding of what's going on here, we're looking at the 2017 sales figures on the left and 2020 on the right. So we're seeing the trend overall. We can see a very obvious decline in sales from Mercedes, another obvious decline from BMW, another obvious decline from Lexus, another obvious decline from Audi, another obvious decline from Buick. Tesla, a huge and obvious increase, a decrease in Acura, a decrease in Cadillac, a decrease in Infiniti, Lincoln, flat, maybe a slight amount of growth there. Congratulations on being the exception to the rule. Volvo, quite a strong increase. Congratulations, Volvo. Land Rover, a little bit of a hump, fairly flat. Porsche, tiny increase. Jaguar, big decline. Genesis, flat. Alfa Romeo, flat. Now, maybe I'm going out on a limb here and speculating a little bit too much, but is it possible that the overall decline in practically every luxury brand on this chart has something to do with Tesla eating their lunch? I mean, there seems to be a bit of a relationship, right? Tesla starts selling more vehicles and every other luxury brand starts seeing declining sales year over year from 2017 to 2020. What a coincidence. Not. Now here's the spoiler alert. Guess what happens when Tesla releases their $25,000 vehicle? We're going to see the exact same trend, except it's not just going to be luxury brands whose lunch Tesla is eating. It's going to be the likes of Toyota and Honda and Ford and GM. You get the picture. This is one of my favorite charts from James's entire tweet storm as well. We're looking at a tree map showing sales by brand and model. Let's have a look here. So we can see over on the left here, Mercedes, and then you've got a breakdown of each of their different vehicles. Got BMW and Lexus as well, taking up large segments of the luxury vehicle market in 2020. We can also see Tesla taking up a huge slice, but note, Tesla with just 2 real models and a tiny number of vehicles sold here, the X and S, but like I said earlier, it's almost worth ignoring those. Practically just 2 models, and Tesla is already in a dominant position, number 4 overall in the luxury vehicle category here. In short, the Model 3 and Model Y are really punching above their weight. This is the same data from 2020 visualized in a slightly different manner. I think this makes it even more clear. We can see Mercedes the leader in the luxury category, but look at all the different vehicles involved in those sales figures. BMW, again, quite a few different products. Lexus, it's the same deal. Then suddenly Tesla, the outlier, with just 4 models, 2 in particular doing almost all of the heavy lifting. Now again, you'll have to use your imagination a little bit here, folks, but just play along with me at home. Just imagine what this looks like when you add on the Cybertruck, and then the $25,000 Tesla, and then the Tesla van. Exactly. And I think that's a great place to wrap up this video. Like I mentioned, there's a link in the description to the full tweetstorm. I would have looked through more of these and geeked out for hours, but I know it would have put most of you to sleep. But I highly recommend, if you guys have the time, go through, get into the weeds, and really have a look through all of these charts. There's some fantastic information in there, and I think James's projections are extremely realistic. In either case, I thought this was a great way to visually demonstrate where Tesla is at today, and far more importantly, where they're going to be tomorrow. The trend is inarguably up. There's extreme growth, there's total dominance. In short, nothing but a whole lot of winning. And today's magic word is infer. Think about where Tesla is at today. Look at the trend shown in these charts. Then think a little bit more about where Tesla will be in the future. That is the moral of the story. Tesla is just getting started. The hyper growth is still ahead of this company. As I've said repeatedly on this channel, Tesla will, in the future, become the world's most valuable company by market cap. It's just a matter of time. This is something that can easily be inferred based on the available evidence today. A little bit of food for thought. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like up to $250 in free crypto bonuses with BlockFi, use the link in the description. You can also get 2 free stocks with WeBull and a free stock with Stake, also linked in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.